Good day. Ira Epstein of Linn Associates with your financial wrap-up. And this is for Wednesday, the 17th of April, 2019. Time about 4:15 p.m. Central Daylight Time. We have a lot of data tomorrow. So the market's going to be full of economic data. I'm putting it together in my writing for tonight. We have the Mueller report coming out 8:30 in the morning. You know there'll be fireworks all over Congress about that it's redacted, they don't have their opinion on it, blah, blah, blah. And of course, we have an abbreviated trading session in some markets like the FX and the interest rate sector, which close around noontime Chicago. Now, we've already sent to the people on our mailing list the different times of the markets tomorrow. If you don't have it, you can call my staff at any point. They'll help you out with whatever you should need. But do remember, it's going to get thin in the trading. You'll have the electric markets that are open partially. I know they're open Sunday night. I haven't even checked myself for Friday morning, but the volume is going to be atrocious. People will be on the road. It's Good Friday, blah, blah. So in looking at the markets, what do we have? Well, I was on BNN TV today in Canada, and the one thing that bothers me is, and I know this, everybody just keeps thinking these markets can run and run infinite. They can go because there's money on the sidelines. They can go because the economies are better. I agree with all that. What bothers me, and I'm not going to say it doesn't, is you've had a straight line since Christmas Eve, and at some point a pause is overdue. I am not bearish. I'm warning that at some point a pause is likely to set in. That's the end of it. I'm not saying that this market doesn't have higher to go this year. In fact, wherever it's at now, I personally think it'll be higher in December. But that's not a call on the market. A call on the market is what do you do right now? What this market has done, and you can see it, it's run from 24.85 all the way up. Last week it was a bit higher than this week. For the week, we're so far down 12 points. Okay, we're in a resistance zone. You're near the all-time highs. You can get through that, but I'm just warning, there's a phrase, sell May and go away. Has it worked each year? No. Nothing works all the time, but there's a reason it's there, and I was trying to explain that how many times are we going to discount the Chinese deal is in these markets? How many times you're going to discount what's going on with Europe and the U.S.? How many times you're going to talk about earnings? You've gone straight up. That's my only point. Can you go higher? Yes. Are there reasons? Yes, but it's a warning. When I look at where the market's at right now, we had a reversal. You can see that the market made the highest high of this move, closed lower. So it's a warning sign. That's why I'm bringing this up. That's the first warning sign we've had in a while. We had one back here. The market finally got through it and added another leg. You can do that now. Take out today's high, and I'm the first to say that negates my thought process at this particular moment. But it did occur. Second thing, in order to get back to support, you'd be breaking through the 2,950 level, which is the last swing line low. That could put you into the 18-day average at some point, like we did back here, looking for the support. Okay, what about resistance? The Bollinger top hasn't been hit in a while. It stopped hitting it in the first week of April. We're only April 17th, so I don't want to make it sound like it's that far away. And in all fairness to the bulls, it's the highest high the market made, period. We haven't made a high this high since Christmas Eve. A lot to be said for that. But you're getting a pause, and that pause could be for the Good Friday, could be people going away for Passover. You know, there's all these holidays happening this weekend. What I will be watching and focused on tonight is, do you lose the embedded reading? If the red line gets under 80 and stays there, the odds favor that we're going to get something of money coming off the table for a bit. I don't know what a bit means, but that's what I'm suspecting could be in the cards. I don't see that in the NASDAQ. The NASDAQ still looks pretty darn solid here. You still got the higher lows, higher highs. So a much stronger chart here. In the Dow, it could easily flip-flop back under the 80 reading. Right now, both numbers closed over 80 today. They were over 80 the day before and the day before. So you embedded. You weren't back there. Today you embedded. If you lose that embedded reading right away, well, then what I'd be careful of is that price and the 18-day average want to come together just the way they did in the Russell. Look at the Russell. You lost the embedded reading. You had set up a pattern right through here that if you took out this low, I'm talking 2 days ago low, this one specifically at 1577.30, you had higher lows, higher highs. If that's taken out, what happens? You're back under a previous low. As it turned out today, I wouldn't know that. You have an outside day down. And where did the market go? Well, 1563.75 is the 18-day average. You went to 1563.50 and you stopped there. You lost the embedded reading. In fairness, this market doesn't have to go lower. It's hit the target that I had in mind. If it picks up momentum here with the swing line already down, and if prices close under the 18-day average, you could put into play wherever the Bollinger Band comes into the market. The other thing different in this market is that the 200-day average of closes acted as the resistance. That did not happen in the other stock indices. In the VIX, I have been saying that the first time you're going to hit this lower Bollinger Band, if it works the way it has in the past, I expected the pros to show up and write puts right against it. That's when the market obviously was the most bullish. You were through yesterday's high in the stock indices. By day's end, you had a big reversal. Momentum's trying to point up. I would not be surprised that the market makes a run for the 18-day average of closes. If you take out today's low, you break my train of thought. That doesn't mean I think the pros will come out of the puts they wrote. I think they're going to hold them. I think they're going to look for that number. In the T-bond market, you finally are down into the lower Bollinger Band. You are oversold in the market. You haven't had a trend, but you've now managed to go from, think about this. This is when you were in the 244 area in yields. Now you're in the 260 area, from Bollinger top to Bollinger Band bottom. I'm expecting the market, especially tomorrow with a small trading day, not to do an awful lot. I could be wrong. You never know. If this gives ground, the next support's the 100-day average. On rallies, resistance back at the 18-day. In the T-note market, same thing. Lower Bollinger Band, oversold. You could even embed down the road here. You've got today both numbers under 20. You had both numbers under 20 yesterday, not the day before. You need 3 days in a row. So I wouldn't be surprised. Markets typically don't embed for this market to try to give a bounce. In TLT, you never did make it to the lower Bollinger Band. Will you? I don't know. But you've got this market in a downtrend. From here, you've got the lower high, lower lows. Support in between the lower Bollinger Band and the 100-day average, but it is already oversold. In the dollar index, how many days are we hitting now this 18-day average? We're just hanging right there. With an outside day up today, the bulls grabbed control of the market, but you have divergence. You've got momentum, which often leads price pointing down. You've got bias up because you managed to just close over the 18-day average, and you have an outside day up. Where you could capture the bulls is taking out today's low. That could put you back to wherever the Bollinger Band is. To keep the bears away, you've got to close higher than the 18-day average tomorrow. That's what's required, and not take out today's low. In the eurocurrency, you've reversed the market to an uptrend. So something's got to give here between the dollar and the euro, in my opinion. One of these is wrong. Higher lows, higher highs, overbought. If it continues up the 113.91 zone, the upper Bollinger Band looks like the resistance with an outside day up. If you take out today's low, what it would do is put into play the 18-day average, not necessarily more than that. In the British pound, trendless. You've had these rallies recently back to the 18-day average that have failed to take the market anywhere, but there's still no story. We don't know what's going on with Brexit, so we have to play that out. In the Japanese yen, you have an embedded reading, which is bearish. Until it's lost, you still have fully in play the possibility of getting to the lower Bollinger Band, lose this reading by getting the red line over 20, and I would think price and the 18-day average make a run at each other. Right now, I think the bears have total control of the market. In Bitcoin, you remain in a market that is overbought, lost its upside momentum, and will it get back between price and the 18-day average? So far, my work says yes, they should crawl back to each other. Doesn't mean I'm right. In the Brent versus the WTI crude, we got as low as nearly, the 660 level. You've added back $1 to it, which means Brent is stronger than WTI right now. Now, when we look at the Brent, we still see the pattern of higher lows, higher highs. More important, you've got the embedded reading. Until that's lost, on breaks, I contend that the bulls are there buying the market, still looking for the higher numbers. For those of you that use pivot points in your trading, this has been one of these traders' delight markets using those as I teach it. Doesn't mean it will stay that way, you never know. In WTI, you can see the stall pattern. It doesn't look anything like this one, which has managed to still crack out the higher highs. This market's starting to fade on those higher highs. The question is, does it get back to the 18-day average? If it does, you probably lose the embedded reading along the way. This still rules the day, and until it's lost, the bulls still have their ray of hope, and they're the ones basically still saying market's still good. Same in the gasoline. You know, it's hard to be short gasoline going into this driving weekend, right? We'll see what happens after it. It's got the pattern of higher lows, higher highs. Until you lose that embedded reading, I remain in the friendly camp. And notice June natural gas. By the way, notice that I've gone and changed out of the May contracts into June now, and just the energies here. It's time to be out of the May as far as I'm concerned as an analyst and moving where the volume's moving. In this market, it's been a straight line down. And again, you're at that funny time of the year where the weather isn't hot, but it's no longer going to be that cold, and there's not that demand for the natural gas, so you get builds in it from different types. My morning subscriber video, again, I want to explain to you what this is. In the morning, I wake up early, folks, 4:35, and done my reading and all. By 6:20, I'm trying to record a video for you. In the video, I throw out my trade ideas as I see them right then and there to get you started during the trade day. I'm able to say in that video, unlike here, buy here, sell there, put a stop, do this. I don't have to talk the generalities, what I think's going on. I'll stick my neck out a country mile. The rationale being that I want to be a sounding board. And as a sounding board, if you like what I do here, you probably like that for the idea that it's starting your day off. I have it out generally before 7 a.m. Central Daylight Time. It takes me about 15 minutes to record it, 15 minutes, 10 minutes to render it and get it posted. So unless I run into a snag somehow, it goes out, and I think you'll find that it's really interesting and it's out there bright and early for you, that Central Time. To find out more about it, it's simple. Go to our website, www.iraepstein.com. Under Research or Education, you'll see Ira's drop-down menu, Ira's Morning Subscriber video. Read about it. You'll see it there. There's no contracts to sign. It's 26 cents a day for yourself to give it a try. If you like it, we have two ways you stay with it. You can either go 30 days at a time, you go a year at a time, or you can stop whenever you want. I'm not honing you in and saying this is a contract. But is it worth taking a look at? Well, for 26 cents a day, you be the judge. I'm Ira Epstein. Have a great night.